Good weekend. Ira Epstein, and yes, I'm back from my 5-day vacation. Had a ball, needed it, and I'm refreshed. This is the weekend. It is Sunday, the 3rd of November, and we're getting ready for a lot of events. The election coming up on Tuesday. On Thursday, the Fed going to tell us what interest rates are doing. But right now, it's all about the election, and if you're like everybody else, probably tired of watching it on TV, just about everything you see is about that. Coming into the markets, what we're going to have tomorrow morning are factory orders for September. They'll come out around 9 in the morning. They're looking for about a 0.4% decline. Baker Hughes weekly rig count came out on Friday, and the number itself, well, you can see where we're at. Pretty flat in the, as to what's going on in the U.S. and flat in the world. You lose a little in Canada. Internationally, you picked up a few going in there. So you look at all that and you say to yourself, okay, what do you do with these markets? Well, one of the things I want you to do is understand I write about them. I'm back, I'm fresh, I'm here for the election, I'm here for Thanksgiving, Veterans Day, Christmas, right through New Year's. So you've got me, that was my time off, and we'll talk about that at the end of all this. But as we get into the marketplace, let me get over to where I want us to be. They'll be right here. There we are. You can see tonight you're getting a mixed bag, down about 3 points in the S&P, 95 lower in the S&P. Gold peaked out temporarily in that 2,800 level, pulling back, and I think it's a healthy, good needed pullback. The dollar tonight down about 37 points as most currencies rallying against it. If you're trying to make sense of all this, God bless you. I hope you can do it. A lot of us can't. Not trying to, don't know how the election's going to go, don't know the impact as to what a Trump or a Harris victory will or won't mean on the marketplace. You can get all the guesses you want, but you don't know. The reason you're up right now in the energies primarily is because OPEC came out today and on their website said they are not going ahead with the December increase of 180,000 barrels a day. Instead, they are postponing it, and that's the key word, postponing it, and it'll be discussed coming up soon at their next in-person OPEC meeting. Okay, that makes all the sense. Bonds and notes, well, as you can see, a pretty strong rally. I would think that what the market did is the market from this point forward has probably seen the worst on yields, because I think the market rightly expects now a 25 basis point cut by the Fed, because all you have to do is look at the employment numbers and the CPI. We've had falling inflation. There's little argument about that. Then we thought the labor market was strong, but the jobs report that came out last week shows a different story. First of all, there were revisions to August and September, down over 100,000 jobs. And then we only got a 12,000 job increase, pathetic is the right word, versus the 100,000 that was expected to come on. And now we are seeing the impact of the Boeing strike, which will be voted on tomorrow night, as I understand it. And of course, the impact of Hurricane Milton and all the others that have been going on. But when you look at the participants, the number of people that's sending in back the questionnaire was down over 50%. So these numbers are going to get revised again. If you're trying to make heads or tails of it, again, I wish you the best. I'm sure you can do it. I can't. So therefore, I look at what we've got, and I think the Fed's going to go now to 25 basis points. When we look at the S&P, we can see how the market's come up, backed off, and right now, temporarily for the month, we are up 16.25 points, but it's only the 3rd. So understand where you're at. You're in the 3rd of November. When we look at what the market did on a weekly basis, we did get as high on a closing basis as 59.06, and we are down about 150 points from there if you look at it in round figures. And maybe this market wants to go back down to challenge again the 18-week moving average of closes. Now, I am of the opinion that regardless of who wins, if the market can correct here, which is what I'd like to see, I think we then take off again and we finish off the year on a very, very strong note. Why? Because as earnings season's coming to an end, you can see the companies that had to get hit, got hit. Those that wanted to gave you some forward guidance, and they're setting themselves up, I think, for good numbers at the end of the year. and that's just the way that I'm looking at it. When we take a look at a weekly bar chart, you can see how the market is slipping back. The pattern is still one on a swing line study. And if you've taken my courses, you understand the swing line. It connects the current price to either the prior week's low or high, depending on a set of rules that I lay out. And it's another way to say, is the market trending, which it still is. You have a pattern of higher lows, and certainly these peaks are higher. Where's the market likely going down to if it breaks? The word is if. Again, that 18-week average, 56 would not be a surprise to me. When I add on to it the Bollinger Band, you fought at that number for about a month. If you look at it, about 4 weeks overall. Now you're bending over. And as the market's coming in tonight, you still have an embedded reading. You don't have to go down to that number, is the point. Until the red line closes under 79, the trend of this market is up, and it is still being bought, in my opinion, on a weekly basis, including tonight, by the pros. Close under 79, I think they'll throw in the towel on a weekly basis. Now, let me give you the bad news on that. That's on a weekly. So you could crush today, come down. You've got to then make a guess. Does it have the strength to come back up? And that's where somebody with my experience tries to step in, and that's a key word, and guide you through that. Hey, no matter what it does, it's still going to keep that reading lost, or no. This can come back if it does X amount in the next few days that make up the weekly play. So right now, I do think the pros are buying, and I think they would come out on Friday if you got under 79. But I will mitigate that, obviously, Tuesday and Wednesday as we go into the election day. We see on Tuesday night the results. We may not know the election result itself for days on this week. Brokerage firms are already raising margins. I know that one of our clearing firms went up 50%, so they took their margin from 100 to 150% to protect clients. It makes sense. I've seen this before when I was running the margin department for my own IB. I used to do this all the time going into reports. The last thing you want is somebody to get a phone call, hey, you owe me $50,000. Make it, and the whole reason of this is to make you understand that there's plenty of risk. There is no amount of money to cover you for a catastrophe. Things just go. But intraday, intra-evening, you do your best. And if you raise margins enough, it's sort of a warning sign. You decide if that's appropriate or not. Do you want to take on that risk? And remember, futures are not stocks and ETFs. This is 90% leverage most of the time. Higher high, lower low, you're losing the embedded reading. If I come back on this chart, which I can do, on the close of business, you did not lose it this Friday. You were at 79.38, which meant unless you open sharply higher, you're going to start off the week losing that number. Steady to lower will do it. And basically, you're down 100 points, and you're already losing the number. You're down to a 75. It's how the weighting of this index takes place. It is not the place to be right now. In the NASDAQ, you are flirting. The word is flirting. Got that eye going like that. You're flirting with trying to take the market down to lose that, but you haven't done it. It's more like the S&P. It is still staying embedded. The pros are still bullish on this market. In the Russell, it never did embed. It got overbought. And the market is still in overbought condition. I don't believe that overbought conditions warrant putting new money into a market. The trend is up, the bias is up, but you are overbought. We then go to the 5-year notes, and as you can see, lower highs, lower lows in the market, oversold as can be. I can make an argument very easily that this market, for no reason at all, can rally back into the 111 to 112 area overall. In the 10-year, I can make the same identical argument as you're oversold. You've gone basically almost straight down in the market. You got down and tried to challenge Bollinger Bands. You still could. And the question, of course, is who wins? What does it mean for interest rates? What does it mean for the economy? I think the market is built in, past tense, that the Fed's going to go 25 basis points. So don't expect that to be a market mover. A market mover would be 50 basis points. I see little, if any, chance of that taking place. And remember, the Fed moved its meeting back. Normally the Fed meeting takes place, if you look at them, on Tuesdays and Wednesdays normally. They moved this one to a Wednesday and Thursday so they can basically not interfere with the election from their point of view. You went down in the dollar index. You did hit the 200-week average back here. You've rallied up, and on a stilt, you've become overbought. The question is, can the market make it into the 105 area or not, or does it want to back off from there? Again, the election, very important event. The euro had a higher high and then a vertical price drop, went to the 100-week, and it just like it ran into a major support zone, it's held that. And it's done that now for over 4 weeks in a row. It hasn't been able to go up to the 18-week, it hasn't been able to get down to the Bollinger Band, and it's oversold. The Canadian dollar has been a vertical price drop, just one side. Questions about Trudeau staying in power. Bank of Canada wanting to cut and cut aggressively on interest rates. Worries about how the economies are doing. Worries that they have too many immigrants. Not enough housing. Worries about oil prices, all weighing on the market at one time. And of course, they're in quite a bit of a potential row with China on imports, exports. We'll see what goes on. In the Japanese yen, it's just a market of little belief. The market rallied in front of the past month and a half, but for the past month and a half, remember, this is a weekly chart, you've been just slipping away as the market is saying that they don't really have, and I'm talking the new Prime Minister and the head of the Bank of Japan, that they're not being aggressive in the marketplace. They don't want to be aggressive, and the market is weighing on it. You're not down to contract lows. You're oversold. The trend is down. But where do you come in and put a stop if you wanted to play that market? In Bitcoin, let's face it, this market got, while I was gone that week, you got up over here, nearly 74,500. You've backed off, but this has been good. If you're playing Ethereum to play with this, you're in a different world. That market's been going down. This market has been coming up. When we take a look at Brent oil versus WTI, the market's been able to stay now for over a month, if you really look at it, over the 18-week average at 350. When you look at Brent, it's been coming down. Again, I'm going to repeat. I think today it's up because they're not putting more supply on the market right away. And remember, the Saudis have built in a budget of near $100 a barrel. This doesn't do them any good at roughly $74 a barrel to get there. It doesn't help the matter whatsoever. But they're putting oil on the market at this point in time, would just add to all the other oil there. I think they want to see who's going to win the U.S. election, what's going to happen with the U.S. and Iran and Israel and Iran. The U.S. Very important in all this. And I think you're just taking a hard look and saying, when Israel hit Iran, they took out the oil market premium, took it out because it wasn't severe. Now there's talk that Iran is saying they want to hit back at Israel. Well, if they do, and if Israel believes its information that they learned was correct, where's the air defenses for Iran if that takes place? So a lot of events taking place there. WTI oil still in a bearish overall mode, trying to maintain a relationship with what the Brent does. Gasoline prices down beautifully right in front of the election. So Biden did succeed in his energy department in dropping the price of gasoline going into the election. I appreciated it because I drove all over the state of California. I shouldn't say all over, but from LA up north through Sacramento, all the way up near Oregon. So I was rather high up and then had to drive back down. I logged an awful lot of miles, probably 1,500 miles or so, as I visited family members, my uncle, my son. It was great. Lower highs, lower lows, coming down right here, getting itself a bit what I'd call oversold though in the marketplace, and you put it together and you got to come up with a game plan. And right now, probably one of the best things you can do for some people will be, number one, getting my research and listening to somebody with experience that has gone through these elections. Certainly not one like Harris and Trump. Certainly not one with the president, impeachment proceedings, a felon, go on and so on. And certainly not a last-minute candidate when a sitting president, just steps out of an election after one debate went terrible and his VP has to step in. What is it all going to mean? How do you work with it? My charts will look like that. I cover all these markets. I'm going to add things this season. In fact, I'm going to add things soon. I'm going to do some beta testing for existing subscribers on some of the different things I do. Our window envelope numbers come in this. You're going to see that this works. If you have a QT Mobile, you can work it on your PC. You can work it on your computer. It works on all that. And of course, we try to give you the idea here as to what I'm seeing in the market, why I'm seeing it, specific trade access, free access to all my special reports. And if you know anything, you know I've been doing more of them, and I'm going to do one probably right after the election and try to give you more information on that. Just go to iraepstein.com research, or move your cursor to the top here, go in there, give it a try. You can cancel it at any time. We make it easy. You go into the member login. You can even pick the date when you want to cancel it, or you can change the subscriptions around from this one, and you can add the ETFs to it. There's many things you could do. We try to make it as easy as we know how. In the meantime, I'm Ira. It's great to be back with you. I'll catch up with you all in the morning. Have a great